We are back for another awesome week in the markets. Seeing some green start to pop up on the board. Crypto is seeing a nice little run up right now. TradFi is pretty flat. We're seeing some back and forth at key levels of support and resistance. Can't wait to dive into all of that and more. Before we get going, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We are not financial advisors. We are a few guys who love following the markets, tracking our bets, but please do your own research before making any buys or sells. Kevin, we got an interesting week ahead. There could be some volatility. We got a lot of Fed presidents speaking. They seem to be having, contradictory statements right now. I don't know what to believe. We have inflation data on Wednesday and Thursday. We have more jobs numbers. We're starting to see some bank earnings coming in, a lot of tech earnings the following week. Like, things are ramping back up, and I'm pretty excited.
Oh yeah, 100%. I think that we have a lot of stuff that's happening this week, and I think more of the important stuff is going to be with earnings, not as much with CPI. But yeah, I'm really excited. I looked at some of the charts over the weekend, and I was just seeing things that we definitely need to go over today. But yeah, it's going to be an interesting next week or two in the markets, 3 weeks even, all the way till the end of July. So I'm really excited for this time period right now.
Me too. So let's do a quick look ahead for this week. I want to go over the different reports we have coming out. We actually just got the consumer credit number should be dropping any minute now as well. Want to take a look at that. But we've had three Fed speakers so far today. Vice Chair Barr, San Francisco President Daly, Cleveland Fed President Mester. I think Atlanta Fed President Bostic as well spoke earlier. He was the one who you and I are both not really sure where he's coming from. We'll talk about that in a second. Wednesday, we get CPI, Consumer Price Index, and core CPI, so minus the food and energy. That's going to be the final big report before the Fed meeting. Two more Fed presidents are speaking after that comes out. So I'm really wanting to know, what their reactions are, especially Bostic is also speaking that day. And that's going to be on the heels of the CPI print. He said earlier that he sees inflation, going in the right direction. And when we look at the core number, I don't know where he's coming up with that. Right. So I want to see that number on Wednesday. I want to see his response to it, because if he turns bearish as well, if we look at the data at this point, as far as what we're expecting to see for the remainder of the year, it doesn't add up. Like, the markets, I think, are still not believing the Fed. They just aren't. Like, we have it priced in that we're seeing 25 basis points later this month on the 26th. That's great. But we've already heard that we're probably getting at least two more rate hikes this year. And the probabilities just don't back that up. We see the chance of the rate going up in September at only 22%. The rate of it going up in November at only 32%. And then for December, that higher rate being at 28%. So it's not, something is still not clicking with the markets. They still don't believe the Fed. They think data is going to come in better, or they think that the Fed is just full of shit. I don't know. But there's going to be a wake-up call at some point, because these inflation numbers are not going down fast enough. They're barely going down at all if we look at core PCE. And so at some point, the Fed's actions are going to have to really put the fear of God in the market if we ever want to see this goddamn inflation come down.
Yeah, if they want to really bring it down, is 7% federal funds rate out of the question? Maybe that's what brings people to, reality, come to grips a little bit. It'd be terrible, but again, if they're not able to bring the inflation down to 2%, or at least bring that core PCE down, it's like we said, it's been hovering at that same position for the longest.
Since December. Exactly. It's been between 4.6 and 4.7 since December. That's too long and too high for too long.
Yeah, something's got to give at some point. They have to make sure that they obviously get a handle on this. I forget which Fed president it was. I can't remember who it was actually, but they were saying that the consequences of doing too little outweigh doing way too much. And I think that's the mentality that the Fed has to have going into this, right? We're kind of acknowledging that there's not going to be a recession, or there's going to be a soft landing, but then we're getting a lot of contradictory statements from a lot of these Fed presidents. So I think there's a disconnect between what we're reading, what we're seeing, and then what the Fed is actually telling us what they're going to do. So, it'll be really interesting to see how the CPI print comes in, but for the most part, the markets are just absolutely disconnected from, I think, the agenda of the Fed.
To that point too, the margin of error gets smaller and smaller the further out this pushes. Like the
Right.
further out we delay the inevitable, the margin of error you have to actually have a soft landing, which I think is
Push
not
it.
the like that. Yeah. This mild recession light, whatever the fuck you want to call it, like it's going out the window. So the Fed just needs to make up their damn mind. We're heading into an election year too, so that's going to mean a whole other load of bullshit. But we'll get to that when it happens. We're not going anywhere anytime soon. I can't wait for election season. It's going to be an absolute blast. Just some of the bullshit that gets spewed. But to wrap up what's coming out this week, we have Thursday some more jobs data, initial jobless claims, and then producer price index and core producer price index. That doesn't get nearly as much attention, but still important numbers to look at. And then Friday is consumer sentiment. So that kind of wraps up what we have coming out this week. News has been, pretty light so far today. We haven't seen anything too crazy come out. The Fed president speaking, we've discussed that. So we still are just kind of waiting. Like and that's the markets are reflecting that, right? Like if we look
100%.
across the board, the Dow is having a strong day, but the Nasdaq and the S&P are each trading, with upper plus or minus, 0.1% or less. So not a whole lot happening out there. We're waiting on the CPI numbers. We're waiting on earnings for banks this week and for a lot of tech, beginning of tech next week. So I think from that standpoint, these, the rest of this trading day for the next hour and then tomorrow as well, I think could be fairly calm unless there's any monumental news, which obviously we can't predict.
Yeah, 100%. I think that we're going to be waiting, just sit and wait pretty much for the next few days until we get some of that data coming. For crypto, we can kind of see that the markets are pushing up a little bit against that support. They were pretty much on support going into the weekly close, last night. And, we started to see a bit of a push up. I think what we're seeing a lot of is illiquid market. There's a reason why people aren't buying certain things over certain areas, but, everyone's afraid that maybe this isn't going to go below. Maybe we're still in a bull market, but it's just a really strange place for, how TradFi and crypto are a little bit decoupled in some ways. We see a little bit more bearish sentiment, I think, in crypto, and the price reflects that a little bit. And we're seeing some squeezes, whereas we watch, TradFi, and I think it was, I can't remember the exact number, but in June, it was an insane amount of short sellers that absolutely lost. I believe it was in the billions in TradFi, and the market just kept going up. So it's really interesting to see. Maybe we'll get on the same page at some point. Maybe one bottoms before the other, but right now it's just absolute, sideways trading. I think until we get some of that data this week.
Yeah, for sure. One thing I'll touch on as well. I like when we talk about our plays on here. So I sold about a third of my Nvidia position today. I just think we've reached that point where a lot of the AI driven rally is coming to an end, and we're going to see some sort of pullback there. Nvidia, I still hold a good amount, but I don't want to be one of those people who never takes profit, right? And if you look at what we've done so far this year, I held Nvidia through a lot of pain last year, and it didn't make sense for me to not take some profit because let's look at where we were when we started the year. We are up. Let's measure this out real quick. Up 200%. So I felt like, okay, it's probably a good opportunity to take a little bit off the table. Mentioning you before the show, I think some of the game plan, there's a tax liability there. So moving about half of that, that capital I generated into a 6-month bond, while not the sexiest thing, is currently paying 5.5%, which, setting aside what I'm going to owe in taxes on that, and if I can reduce that tax liability, well, that's just more money I can invest next year, hopefully when things have pulled back and are at a better price. It's also the best rate you can get on a bond right now. Like if you look at the yield curve for bonds at this moment in time, the highest rate you can get is on a 6-month. So to me, especially if you're coming from the world of crypto, is a 5.5% return sexy? Absolutely not. Like, people talk about how they got their meme coin bags and they've made, 1000x or whatever the kind of bullshit they're talking about. But I think for the state of this market where we're seeing exhaustion playing out from this rally in the first half of the year, I think locking in 5.5% in the back half of the year, getting that capital back, letting that bond fully mature, and then, January of next year, being able to take that money once the tax season is over, as we move into an election year, as we move into the Bitcoin halving, if you believe that's going to have an impact, and being able to redeploy that capital with some extra money tossed in on top, I don't think is the worst strategy you can have right now, especially if it means that it's just one less thing to worry about. Like, I know for some people, when they have cash on hand, and I find myself doing this too, like worrying about timing the right stuff, like just don't stress about it. Put it somewhere, let it sit away for a while. Don't worry about it. Enjoy the rest of your year, and then you can come back and deal with that in January. So, kind of some of my thoughts at the moment on what I'm doing with the cash that I have, because I think it's important for us to be transparent with kind of our decision making and our rationale here. But that is not financial advice. Once again.
Yeah, I mean, I completely agree. We are pretty much looking at the charts all the time, so telling people what we're doing as well just gives them some insight into what we're doing, trying to make money in this market, right? I think you did a pretty. I mean, that's something I think is a good idea. Like obviously taking profit. I personally have been taking profit every chance I've had, shorting the market because for the most part, it's been back and forth, right? Full transparency, I did have to close a couple of shorts when I moved from KuCoin, just because, just a reminder, July 15th, you won't be able to use it in the United States. You have to KYC, and pretty much if you're a citizen, you're not going to be able to, access it. But I took a bit of a loss on Tron, and I just haven't re-entered that position at all. I have no interest in re-entering a short for Tron. And I took a bit of a loss last night with Waves. Those are both small positions, nothing too considerable that I'm worried about. But for the most part, sometimes you have to take a loss in this game and, just make your winners bigger than your losers. And, I'm grateful that I'm able to, take that off my capital gains too. Like I can just roll that into profits into something that's more of a sure thing. Like I could be more confident in that being in a project that's not going to be, illiquid and shooting up and liquidating people. Like last night, Wave shot up 33% within 10 minutes. I had no chance of saving my shorts. I just clocked out and said, whatever, I'll take whatever I can get. But,
Your shorts took a shit right there, Kevin.
Yeah. Again, it wasn't a project I necessarily was like, oh yeah, it's going to zero. It was more of just one. It's like, maybe I can make like a short-term swing on it. And I just got in at the wrong time, and it happens. Right. But, just adding that capital back into some other bigger short positions that I have more conviction in. And, I feel confident with them. I haven't rolled back into anything yet. I still have the cash on hand. I figured we were going to see a bit of a squeeze. We saw a little bit more of a squeeze than I expected for some coins, and some are retesting really, really key resistance, and they were just bouncing off key support. So we're kind of in this range right now. It'll be interesting to see what happens, but I do anticipate, rolling that into shorts, whether it's Cardano, Binance, or Matic in the coming days or weeks.
All right.
Yeah.
Ace, yeah, good call out on the KuCoin thing. Need to get off there today. Yeah, buddy, that's probably a good call.
Smart move.
Okay, let's get into kind of the main part of today's show, which is looking at charts for some of the big seven, right?
Oh, yeah.
These companies that have been leading the way this year, whether it's been Nvidia or Tesla or Meta. Where do you want to start on this one? I know that you have a lot to say about Netflix. They're reporting earnings next week. We also see Meta reporting earnings next Wednesday. So interesting times as we move into the earnings report for those two companies. So, kick us off wherever you want to, Kev.
Absolutely. We're going to start with Netflix just because this is one that I found last night. I'm like, worst case scenario, this might get pretty ugly. But first thing I want to do before we get into Netflix, I want to show you guys what this is. This orange line here is an ABC corrective pattern. This is Elliott wave theory. And within this pattern, there's 3 corrective patterns as well. You get a 5-wave move, then you get a 3-wave move up, and then 5 waves down after that. So pretty much price will move in waves within the first wave down to A, which should be the first 5 waves. The corrective pattern within that would be 3 waves up, and then after that would be followed by another 5 waves, and that would end the corrective pattern. And when I look at Netflix on the macro, I see 5 waves down, and I see 3 waves up, which tells me that it's likely we're going to see 5 waves down, and we're putting in this massive, ABC corrective pattern, which makes sense, right? We're in a bear market, and then, it would be finishing off whatever this move up to the upside has been since beforehand in the bull market. So when I look at this, I already see that we got some massive gaps on this 5 move down, so that's pretty impulsive in my opinion. If we go over to this right here on the weekly, we can see that we have 1 wave up here, came down to about 274, and then we're currently at 442. Now, I'm not saying that this move is over. I still think that we have a little bit more to push up. We've been filling these gaps for the most part in a lot of these stocks, and Netflix happens to have a really big gap right at 5. What is it? It's at 506 to 457. So I wouldn't be surprised if you see a little bit more of a push up. You can see the daily stochastic RSI is not in the overbought. It's not in the oversold. It's kind of in the middle currently. But yeah, I think that's, once we finish this structure and this B wave of the macro, we're going to come down for a C wave, which is going to be 5 waves within that C wave. That could bring us down to some pretty low targets. And again, we have to fill this gap that's right here around 381. And so we got another gap that's all the way down here at 107 to 110. Now that's bearish, like absolute worst case scenario. I just put that out there just so you can keep an eye on that. But I think that a conservative target would honestly be like 156. So we get a double bottom of this, and it'd be just a regular flat correction or something similar to it. More like a regular flat, I would say. But yeah, I think this would be a pretty good level right here at 158. I don't know why that shot all the way down there, but 150, 156, 158 around there. And then the worst case scenario, I think, would be 104, 107 area.
That would be quite the fall from grace for Netflix. Another company that has had a pretty solid 2023. If we look, they started the year right around 282 a share. So that is a increase of 57% on the year. That's a big move up in a short period of time. So I don't know if I'm quite, you're the technical guy here. So on that front, I don't have really a leg to stand on.
I will say this though, we're also talking these tech stocks, man. Let's look back at let me pull it up real quick. Let's look at Cisco from 2000. What was it? 2000.com bubble. I'm just going to pull up Cisco real quick. And I'm not saying these companies go out, forever, but if we look at .com bubble, some of these stocks that were up, massive, were able to come down. And I think that we are in a huge bubble right now. The reason we chose these stocks is 100%. Like, see, that's down 89% from the all-time high back in 2000 and what is that? 1999 to 2000, 2001.
But what's the time frame from that big move up right there? Like, how long can you look and kind of see, like, from the peak of it to when that run up really started?
Peak of it to the run up as in what? So, like beforehand?
No, it's like when beforehand, before okay, that huge crash. So like let's measure from the peak to lower like down one there. Yeah. Like, how long of a time span was that?
Let's go to 97. We'll start here right after that bottom. So that was 1,094 days. So what is that? A little bit under 3 years.
Okay.
So, I mean, we've seen a pretty good move. Like, this is Cisco, but this isn't Netflix. When we go to Netflix, obviously we've had a pretty amazing history for Netflix shooting up, right?
Yeah.
I mean, it's insane, right? But again, I'm just pointing that out because a lot of the stocks that we're currently talking about are ones that have been pretty much hoisting up this entire market. So if any of these see pretty bad, price action, it's likely to see, a lot of other things in the market just absolutely tank with them, right? If there's no belief in some of these stocks, then there's probably not going to be in the ones that haven't done as well at the beginning of this year. So that's one of the reasons why I want to bring up Netflix, even though it's done pretty good this year, and maybe there's Carnival Cruise Lines who's done better technically compared to where it was at the beginning of the year. I think that these where people aren't going to be able to say they have bad earnings, or people aren't actually subscribing to Netflix, they're canceling their subscriptions. It's very possible for this to be the start of the downtrend. So keep an eye on Netflix. I think it's going to finish out that structure. It's going to be pretty macro, pretty big.
You said that for Cisco, that initial period was like 1,000 something days.
Yeah.
Yeah. So if you look on the Netflix chart there, I believe, when is the date? That kind of upside down U shape right there, beginning February of 19. From that to the peak, it was right around the same amount of time as Cisco's. And then that huge drop down was about 74%. I was just measuring those. So kind of an interesting comparison from that standpoint. Now we just have to see, so we've already seen Netflix take that massive dump for greater than 70% one time. So who knows? It's not impossible, that's for sure.
It's definitely not impossible. Next one, should we go to yours, Nvidia? Pull this one up.
Sure, let's do it.
You got some crazy stuff going on here. This is the monthly. Let's go into the smaller time frame. Let's go into like the daily. So I want to pull this up. But yeah, when I look at Nvidia, what I'm seeing is something It's probably more of like an irregular flat, which means that the B wave goes a little bit higher than the origin of the A wave. So we got this, from November of 2021, came down, which a pretty good amount. I mean, what is this? This is roughly 69% from the height of November of 2021 all the way down to September of 2022. So it had a pretty good move to the downside. And then we got a massive push to the upside, right? We got pushed all the way up to all-time highs where we saw, let's see, from here all the way to here. So about a 312% on the year. You said it was up 200%. So it's pretty, I think you're muted.
I am muted. You know who said to short it when we were near the bottom there?
Kramer Jim.
Kramer Jim, indeed.
That bastard. But
he also, if you're looking for a reason to be bullish Tesla right now, though, Jim Cramer did say that the Ford Lightning is better than the Cybertruck. So time to put in those shorts on Ford and just go ahead and long Tesla.
Pretty much, right? Yeah. So we put in this corrective pattern here, and then right here we put in this, absolute crazy pattern. 5 waves move to the upside, and this is impulsive. Like there's massive gaps here. This 2 to 3, this third wave is absolutely impulsive to the point where it's much bigger than the first and third and the fifth wave. So that tells me that we're going to get a 3-wave corrective pattern on the way down. And where could that lead us? We got a massive gap right here that we created from what was that, May of this year, where we just shot up from the close to the open, an insane amount. So that was 318 to 364, 365, right around there. So I have no doubt that that's going to be filled at some point. This blue line is more of the realistic, corrective pattern that I'm anticipating. So maybe we come down into that bottom of it, fill it, go back up, find some resistance at that B wave, which is at 366, 365. And then we make our way down to another gap that I found down here, which is 211 to 222, 223, right? That's more the conservative, ABC corrective pattern that I'm anticipating for this wave C of the macro pattern. But there's also, the ultra bearish one, which, I definitely look out for, because if this does get really bad, it's going to get bad, right? We've talked about how AI is a bubble, and bubbles, when they burst, it's pretty nasty. So that would take us from the origin at the top of this, wave 2, the height of where we are currently, all the way down through this first gap to the second gap, which is that 214 to 222, 223, around there. And then we find some, hopefully we bounce at some point. Maybe the bounce isn't as high as I'm anticipating, but I'm still being optimistic to 316 around there. And then we do have another gap down here, which is very hard to see, but I found it because I actually went on the daily to see if there's any gaps, and there is a gap right here at 150 to 151. Very small. I don't know how much liquidity is actually in that area, but I mean, again, if it gets really bad to the point where we're actually looking at that for to tap into, then maybe we're in a really bad market, and everything that we know right now is an absolute lie. But for Nvidia, I definitely think that we have to fill a lot of these gaps right now, and then we have an impulsive wave, so we have a 3-wave move to the downside. The question is, how big is this going to be? And again, if we look at the monthly stochastic RSI, completely overbought, absolutely insanely overbought. And if we look at the weekly as well, I think the weekly is not as bad. The weekly's coming down a little bit,
87% or so.
Yeah, weekly's coming down a pretty good amount. So, just keep an eye on that. But again, once the money dries up and there's nothing pushing it up, there's only one thing that the markets are going to do, and that's pretty much sell. So I'm not too bullish on that. Let's pull into, which one should we do next? Should we do Microsoft?
Yeah.
All right, Microsoft. Yep, this is again, these are all very similar patterns that we're seeing, right? This is so this would be a double top. So this would be an absolute flat corrective pattern where we come down, and then we make a similar high on our wave B, and then we have to make our way down to find some support somewhere. I think that we are going to probably get to this blue C where it's right here, which would be a double bottom of where we bottomed back in October of 2022. So around 210, 211. That again, that's the more conservative version of what I'm seeing. Worst comes worst, we could see some type of weird zigzag pattern, this orange one, where we go a little bit lower. But for the most part, I do think that we are going to do a double bottom of this just based off the pattern that's forming here. This is on the weekly. If we look on the monthly, I'm pretty sure that this is completely overbought. So we are going to see some corrective pattern. I'm not necessarily bearish on Microsoft long term at all. I just think that, we've put in a pretty good recovery. And if we are, in a bear market and we have to finish these corrective patterns, then we have to finish these corrective patterns. And that means that wave B is almost done, maybe nearly done. And then wave C has to come in and play what, the part where we get into the position for the next bull market, for the next impulsive or the next 5-wave move or whatever it's going to be. But for right now, I think that we are getting near the top of this. And if we start to see it pull back, start to form some structure, maybe a 5-wave structure within the C leg right here, I wouldn't be surprised. And then my target would probably be, October 22 lows. Worst case scenario, maybe somewhere around this 200 EMA. But again, that remains to be seen. I'm not too bearish on Microsoft just based on the structure alone. All right, Meta. We're just going through these because there's 7 of them, and they're all going to lead to the apocalypse of the entire stock market, because there's literally nothing other than these stocks that are holding everything up. This is like Atlas holding up the globe. One day he's just going to take a day off, and it's going to be absolutely disgusting. But this is another one, right? We didn't put in a higher. This seems to me like a pretty standard 3-wave correction to the downside. Maybe it's the double bottom here. I think that we've talked about this last week, where $71 is around the level where I would be aiming for. I just don't necessarily like double bottoms when the B wave is lower than the origin of the A wave. Origin would be up here. The A wave is this one, obviously, but the B wave is up here. I don't think it's putting in anything higher than where it was at the origin, which tells me that we're probably going to come down a little bit lower than the A wave with the C leg. It could just double bottom. It could be just a weird, corrective pattern. It could be just, like a zigzag or something similar to that. But I do think that it's going to just put in a little bit of a lower low. And, I probably could go back to, November of 2014 or something on the daily and try and find, the smallest bit of liquidity that's the huge gap in futures. But for the most part, I think that this is a pretty open and close corrective pattern that we're going to see. We got these gaps that are built here. I think we're just going to go through them and fill them out the way down. And, maybe we just see a little bit of a extended push to the downside just because the market's bleeding and no one's really wants to get into any of these stocks when they're absolutely near zero. It's not going to be near zero, but when people think that it's going to zero. But yeah, that's Meta. Let's look at Jim Cramer's Tesla. We can see this is pretty much a zigzag pattern for me. This is 5 waves down here in the wave A, 3 waves in the B. I expect 5 more waves down here. I think my target, even on the old Folio show, I used to say that $64, Tesla 64, that was the target. It still remains my target. I don't care. Obviously there's been a lot of bullish news for Tesla lately with these superchargers and a lot of, vehicle companies starting to use them as that's the industry standard, which is great. Yeah, absolutely. You don't want to be driving a Ford and then, you have to look for a Ford Tesla or a Ford charger somewhere because those just don't really exist. But, this is 5 waves down. This is very irregular too. This is like a weird 5 waves move down, but you can see a wave 1, 2, 3, 4, and then 5 with the extension down here. You got an easy 3-wave correcting pattern up here in the middle of this B wave in the macro. You got a 1, 2, 3. The main thing for Tesla was that it had to tap some liquidity that was up here, right? There was a huge gap that we see on the weekly from that just absolutely needed to be hit. We see we wicked up through it, and we're currently, filling up this little gap that's right here. I'm not surprised that this is happening. We don't have too much on the way down. I'd have to go again on the daily and see if I can find anything. But for the most part, I think that we are extremely overbought on the weekly. We're overbought on the monthly. I know that for sure. Or we're going to be overbought on the monthly coming to the next month. And we have earnings very soon, right? So maybe Tesla has a pretty good Q2. Who knows? I really don't know what some of these companies are going to do. I know some of them aren't going to be as good as people are anticipating. But, Tesla, I think, is just one that's been holding up the market. People are bullish for it. They've always been bullish on Tesla, and I think that's the way it's always going to be. But for the most part, I think that there's a lot of liquidity that's going to be down here. If the entire market drops, Tesla's not going to be, the one that's going to be saved. No one's going to buy a Tesla when they're unemployed and, rates are at 7% and we're going to have an energy crisis that could potentially happen, or we're at war with China. There's so much stuff on the forecast that could possibly happen that could absolutely send some of these just to zero, not to zero, but to $64 for Tesla, not financial advice.
Okay.
And then,
well said. I think that's you want to wrap it there, or is there any other one you want to take a look at?
Let's do 2-second ones for this one. Google, for me, it's just corrective pattern, right? It's very similar to Meta's. I'm not surprised that it's similar to Meta's. There's a little bit of a gap down here. We'll see if that gets tapped out. But for the most part, I think that this is another one where it's maybe a double bottom of the, beginning of the year around January 2023 low, or if a worst case scenario comes down for, this bit of liquidity that's down here. It's not big, but if we are putting in something crazy like that, I wouldn't be surprised. That'd be the COVID low, by the way, too, where there is that liquidity. It shot up after, hit the low, and then the next day there's a huge gap there. So keep an eye on that for Google, but for the most part, that's still coming down in that similar pattern. And then let's look at the last guy. Prime Day coming up this week. This one's probably really important for me, similar to Microsoft, because these are both stocks that were around for the .com bubble. And, the valuations for some of those during then were, insane. We look at this right now, we're, not nearly as high as we were back in, November of 2021, height of the bull market. But for the most part, I think that it's similar to Google as well, or Meta, where it's going to come down. Maybe it comes down to this and we get a double bottom here, or worst case scenario, we put in a little bit lower, which maybe the 200 EMA is telling us that's where it's heading right now, to the bottom of this move. And then I just want to pull up with this. Yeah, because this is the COVID 2020 low. It's Amazon stayed pretty strong. So that's where we bottom out for this A wave. Maybe it is just a double bottom. Who knows? Maybe it's just a little bit lower. But for the most part, it's kind of open and close. I think that we were going to see some of these liquidity gaps that are created here get closed. And then, maybe this is just setting us up for a pretty good bull run going forward. I don't think necessarily that Amazon's going to go anywhere. A lot of people like Amazon. I think they find it a lot more convenient than going to the store and shit like that. So it seems not recession proof, but it definitely seems like, I think Amazon will be okay. The worst of it's over from 1999 to 2002. I think they're in a pretty good position, even if there is a corrective pattern on the way.
Yeah, I'm wondering if you could, at this point, people are starting to view Amazon as being almost a defensive holding, similar to like Walmart.
I agree.
It's
I think it could be.
It's definitely possible. I think you could also include, Home Depot and Lowe's and something like that, especially with, over the next year or so, when we see how unbelievably high interest rates continue to be for homes. I want to say that the average rate for a 30-year fixed mortgage just is back over like 7.1% now, which is wild. And if the Fed's not going to lower rates much next year, we're going to continue to see a very tight housing market, and people are going to be forced to do stuff on their homes. And that could be a lot more home improvements, renovations, which is good for those hardware, stores like a Home Depot and Lowe's. So something to keep in mind. They could see a nice little run on their earnings, 2024. So that's definitely one place that I'm going to be keeping an eye. If we start to see the market dip as we're expecting, is what are some of these companies that could have really strong 2024s? And I think those are two, just off the top of my head without a ton of research. So that's going to wrap it up for today's show. Great job, Kev. Really, we all know how bearish you are, but there's a reason for it, right? And you always back it up. So definitely appreciate that. We'll be back tomorrow, same time, same place. Probably looking a little bit more on the crypto side of things, as we focused all on TradFi today. But appreciate everybody for watching. If you have not yet, there's some buttons down below that we really, really need some help with. The like, subscribe, drop a comment, share us out on social media. All of those things mean a ton as we try to continue to grow this channel. We want to spread as much, hopefully quality content to as many people as possible. So appreciate everybody once again. You guys are the best. Ace, Randy, love you. We'll be back tomorrow, same time. Have an awesome day, everybody. We'll see you then.
Take care, guys. Have a good one.